Well, certainly it has been a very broad move, particularly dollar yen kicked things off. That's obviously positively correlated with the improvement in the Nikkei, and it can be difficult to work out which was the real catalyst. But you've broken some levels. Markets have been very quiet for the most part for the past few months, so it has triggered some movement, some anticipation of further gains. Obviously, the dollar yen in particular has been a favourite in terms of the contrast between the BOJ policy stance and the Fed winding down QE. We also had a little bit of impetus from US economic data, the manufacturing ISM and construction data added to the reasons to buy the US dollar. So it's had a ripple effect, which is really, I think, caught markets snoozing a little bit. Well, you're right on in terms of growth, it is pretty mixed. We're sub-trend certainly into next year, where we've got unemployment at uncomfortably high multi-year highs. So the Reserve Bank is hopeful about next year's economy, that the investment will pick up, and so remaining on hold for the time being. So the Aussie, that sort of plays neutral for the Aussie. But what we do have is a widening gap between the Aussie and its fair value level, because commodity prices have been particularly weak. We've seen iron ore prices touching equal lows since 2009, and coal is weak as well. So for the most part, you've got a widening gap between the Aussie and its fair value level. We think that will weigh on the currency towards about 90 by year end, though we do think it picks up in 2015. So a bit of a V-shape outlook for the Aussie. I think the short-term trend is to buy US dollars. There are reasons to be selling the yen, the euro, and sterling too ahead of the Scottish referendum. That's come in for some heavy selling. I'm not sure it'll be really sustained against the Asian currencies and the Aussie or Canadian dollar, for instance. But for the time being, it is a strong dollar trend.